This is all about Bitcoin, a show dedicated to all things questions in the markets related to Bitcoin, a little B for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index currently at $47,967. Chugging along, trying to test that $48,000 level. Bitcoin is skyrocketing ahead, about 6.9% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin's two-month triangular consolidation ending early Monday with a convincing breakthrough $47,000 and, as I said, inching toward $48,000, prompting traders to call for an move to the higher side. Swiss-based Crypto Finance AG telling CoinDesk's Onkar Gabole that, quote, the triangle breakout has opened up upside toward resistance at $53,000. Triangles seen by the green lines in this chart represent a steady narrowing of the trading range. They form when bulls and bears are unwilling to lead the price action. So traders and chart analysts consider an eventual escape from the triangle in either direction, a hint of a beginning of a new bull or bear run. The chart also shows that a bull cross between the 50 and 100-day simple moving averages could soon happen. A bull cross happens when a short-term moving average crosses above the long-term moving average, indicating a bullish shift in the momentum and, in this case, strengthening the positive sentiment presented by the triangle breakout. Joining us now to discuss BTC price and more is Josh Olszewicz, head of research at asset manager Valkyrie. Hello, Josh. Thank you for joining us. So taking a look at Bitcoin, we see over the weekend a huge jolt in price, and now it keeps climbing. What's behind this bounce?
Hi, Christine. Thanks for having me. A big part of it's certainly been this Do Kwon Terra narrative regarding the UST reserves that they're building for the stablecoin. So the stablecoin on Terra is algorithmic. And as far as having an additional backstop, they've decided through a proposal to employ purchases of BTC, potentially as high as 3 billion, Do Kwon has said. And we can see all this happening real time.
And a goal of
live.
10 billion potentially one day.
10 billion, yeah. He said both, definitely. So we can see this live.
So do you think that's what's being priced in right now?
It's certainly a part of it. The other part of it is there aren't a lot of holders that are selling. If you look at the age of the coins that are moving, these are all super young coins. So that signifies that holders are hodling.
I believe we have a chart on the hodl waves. Let's take a look at that.
Yeah, so what we're looking at here from Glassnodes is the age of the coins. The higher these slices, the higher the percentage of the network that's moved in the past 6 months. And you can see we're basically at, lows for maybe the past 5 or 6 years here, which just means there's not a lot of activity in general moving on any given day here. Now that'll increase with price as we're starting to see a little bit. And you'll notice that these slices, highs correlate with highs in price as well.
What about the BTC to ETH to S&P 500? Is BTC following the stock market still, or is that decoupled a bit? Because actually stocks today are down.
Yeah, so one of the big narratives coming into the beginning of the year was, are we just another tech stock? Is Bitcoin just another tech stock trading like the NASDAQ, right? And we saw this really strong correlation intraday, intra-week for the past 3.5 months, really. And now there were some shades of decoupling in there with Bitcoin. But, we have a FOMC meeting, the minutes will be released. We would be in lockstep with Legacy in that regard. And that has ended pretty swiftly here this weekend, which is a great sign. not only for Bitcoin as an asset, but for traditional legacy players looking at this thinking, I don't want to trade this because it's just another NASDAQ analog, when that is certainly not the case over the past couple of days.
Mm-hmm. We also see one of my favorite charts is BTC balances on exchanges. So let's take a look at that one. And what does it tell us? It looks like it's dropping off a bit there. So people are holding?
Yeah, so this is another way to look at sort of dormancy or just coin availability, float. There are all sorts of names that people throw out for this metric. But ultimately, most people don't send coins to an exchange unless they're selling. That's certainly changed over the years, but let's assume that's the case. And as we're seeing coins taken off the exchange, you could argue that this represents hodlers hodling, right? So this is coins moving off of exchange reserves onto cold wallets or onto some other purpose. Maybe it's for lending services. Maybe it's Terra represented on here as well with their BTC balance. So if you correlate this again with historic changes in balances versus price, you see that this is much different than 2018, where during that period we saw just a continuous deposit of coins throughout that time.
So Josh, where do we go from here from Bitcoin? You know, just before the weekend, we talked about $45,000 being that resistance level to beat to go to higher highs. We've beat that level. So what happens now?
Sure, that's a great question. It's similar to 2019 in a weird way. So in 2019, we saw this massive decline in prices at the end of 2018, right? But in Q1 2019, we saw this extended period of sideways price action, just a lull in price. And what we're seeing now, this explosive move above a horizontal resistance. I love that you led with that ascending triangle, because a lot of us technical traders have been looking at that for the past couple of weeks now, thinking, you know, this is a possibility. It wasn't looking too promising as we were sort of sitting at lows. There was uncertainty with Ukraine. Legacy markets were collapsing. You know, there's all these hawkish Fed. There are all these reasons for us to break down, but ultimately that didn't happen. So if you measure that triangle out, you get a target of between 50 and 55,000 as far as upside potential. And if you don't see technical analysis on a regular basis, you might be thinking that's insane, right? But all you're doing there is you're just measuring the depth of the pattern and projecting it higher, and that's generally how all technical analysis chart patterns work.
Interesting. All right, so that could be the next resistance we see. I also noticed that we often see these big moves over the weekends. Why is that?
Yeah, on the weekend, there's typically lower liquidity or lower, less legacy involvement as well, traditional players. Sometimes the ease at which the book moves around the order book is certainly easier. We also saw, again, that UST purchasing of BTC over the weekend. So that was certainly a part of it, as there's not a lot of BTC for sale, as we keep sort of reiterating with the dormancy flows and the exchange reserves. If there's significant demand and there just isn't enough supply, and no matter what time of day it is, right, that just tends to move price rather significantly. And they have been buying 125 million slugs at a time. And again, you can see this if you look at their wallets. So that will have a significant impact on price, especially if it's sitting at this horizontal level at 45,000 like it was.
Awesome, Josh. All right. So the next resistance, if we read the charts, 55, bullish case by Josh Olszewicz. Thank you so much for joining us. That was the head of research at Valkyrie, Josh Olszewicz. All right, coming up, my next guest thinks Ethereum will eventually flip Bitcoin. We'll get to the bottom of that with Abra CEO Bill Barhydt. Welcome back. Bitcoin buying activity accelerated over the weekend as trading volume seen here on CoinDesk went up and momentum signals turned positive. On the weekly chart, momentum signals have significantly improved, but it may be too early to tell as momentum remains negative on the monthly chart, which could delay a significant price rally in the short term. Meanwhile, crypto funds seeing their largest inflows since mid-December after 2 straight weeks of outflows. 193 million flowed into crypto funds last week, according to CoinShares, about half of which flowed specifically into Bitcoin-focused funds. Finally, in tax news, U.S. President Joe Biden releasing his 2023 budget proposal Monday, seeking to modernize rules around digital assets and generate an additional $11 billion in revenues by 2032, as well as expand the Department of Justice's ability to counter cyber threats that involve ransomware and the use of cryptocurrencies. And over in India, the tax authority has seized over $12 million from 11 crypto exchanges on allegations of tax evasion. All right. Joining us now to discuss the headlines and more is Bill Barhydt, CEO of crypto trading platform Abra. Hello there, Bill. Always a pleasure. So what kind of trends are you seeing on Abra that might lend an explanation to what is behind Bitcoin's rise right now?
Well, so we've certainly seen a lot of crypto leaving exchanges and getting locked up, whether it's in hardware wallets or in some cases, yield generating services like Abra. So we've seen a massive influx in deposits over the last 6 months, while exchanges have seen a net outflow, except for a short time frame when we saw some concentrated selling, maybe in early December. So by and large, I think that we've had a supply shock, and that supply shock has continued. And during this kind of extended accumulation phase, the question has always been, all right, it's clear that we have a supply shock. What's going to basically be the push that takes us kind of out of this wedge pattern that we were in, this accumulation phase that we were in? It was clear if you go back and look at historicals on any type of kind of invasion or the beginnings of most conflicts, markets tend to move higher. If you look at scenarios where markets are expecting significant rate hikes, usually for the next 12, 18, 24 months, markets tend to move higher, right? Especially in this model where you've got a whole bunch of free money and liquidity still coming into the system. So I think this kind of initial fear of rate hikes basically, leading to risk off or basically having a hangover on Bitcoin. I think that was all unfounded. And the technicals basically said, okay, we're basically still in a macro bull trend. The network effects are still there. They got delayed because of China. What's it going to take to get this kind of back on track? I think now, you mentioned earlier, I heard some talk about what's happening with Lunaterra. Clearly, that's a fantastic story, kind of reminiscent of both Grayscale and MicroStrategy happening 18 months ago at the same time. Now I'm hearing about Grayscale potentially suing regarding an ETF and forcing their hand, and you're talking about potential for a lot of new money coming in there. We're seeing tremendous institutional interest that we didn't see at this point last year. Last year we saw a lot of family office, high net worth money. So there's a whole bunch of things now that I think are pointing towards very positive momentum for Bitcoin. And then, of course, on Ethereum front, and we don't know which one is going to lead which, with this upgrade happening and the amount of Ethereum getting locked up in ETH 2.0 and the merge coming, all of these things are super exciting for the greater crypto narrative.
There's a lot in there that you mentioned that, with the Terra Luna Foundation, the Luna Foundation Luna Foundation Guard buying up Bitcoin, first stablecoin to use Bitcoin as a reserve asset in potentially up to $10 billion. We'll see how that goes. You mentioned institutional interest. We've heard from Goldman Sachs, Bridgewater Associates, as well as Blackwater interested in either a crypto fund or opening some sort of crypto services. And I found it interesting that while we see crypto exchanges losing some cryptocurrencies, you're saying that clients are putting Bitcoin and other cryptocurrencies on your platform. What are they doing with it on there?
Well, generally, they're doing one of two things. They're earning yield, meaning they'll deposit Bitcoin and they'll get up to 8%, depending upon kind of their member status in Abra, 3% in kind, 5% in rewards currency. They're also borrowing against it, right? You can use it as collateral. right now we'll do a free loan up to 15% of the amount of your Bitcoin and Ethereum held in Abra. If you want more than that, you can go up to 50%. You'll pay an interest rate, but we'll actually give you a 15% loan to value ratio loan right now for free. And so
right.
a lot of people
putting it to use.
Absolutely.
Also, Bitcoin dominance has risen from about 39% since January to about 43% today, when it looked like global uncertainty was mired by inflation talk, interest rate hike concerns, and geopolitical tensions between Russia and Ukraine were heating up. Now, analysts reasoned back then that there was a natural flight to Bitcoin in the crypto markets because it was more of a mature asset in the crypto world. Yeah, I heard you believe Ethereum will flip Bitcoin. Tell me a bit about that.
So I don't put a lot of value in the market dominance. I never use the term flippening or flipping. I've never said that. I think that Ethereum could potentially see a massive melt up bigger than Bitcoin, but I don't really necessarily in my mind correlate the two other than when I'm thinking about investment money. And so what I think is happening is I think the network effects for Ethereum in the short term are stronger than the network effects for Bitcoin, right? In the short term, right? And they're totally different. They're unrelated network effects. So Ethereum is setting itself up to be the world's computer. It's being used by stablecoins and NFTs and DeFi and future banking services. Bitcoin is simply the best hard money we've ever had. And in the short term, I think those network effects on that world computer narrative are stronger. And as a result, I think Ethereum could easily see a 10x run over the rest of the year, if not more, and going into next year. I don't have a crystal ball. Maybe it doesn't happen. But when you have those network effects and your asset is becoming deflationary, which is what's happening for Ethereum, I don't see how you don't get a significant run up in price and value. Usually that's the correlation between.
What do you think is is the fair price for Bitcoin and versus a fair price for Ethereum, where it should be at?
Well, Raoul Pal had a great analysis on value moved versus the number of people moving that value. And what that means is large institutions discount the network effects because they'll move $1 billion at once versus 1 billion consumers moving $1. Okay, we'd rather see, in terms of the overall value, I'd rather see 1 billion consumers moving $1. And so what's been happening the last couple of weeks is consumer money's coming back in. Right, that's what was missing in Q4, and so I do think that you're going to basically retest the highs at the top of the channel, and then what it comes down to is what is kind of the macro state. What does that resistance do to the overall market? Do people simply get afraid and take profits, which is what happened in whenever it was October, November, or do we actually break through and the retail money keeps coming in? Because I know at 50,000. Right. And your peers and the other publications start, wow, Bitcoin's back and all this nonsense. Retail investors start coming back in and it becomes a self-fulfilling prophecy. The question comes then, what happens when you get to the top of the channel and you're talking about new highs? Does the smart money start to basically take profits, or do we break through and retail just keeps buying and buying and buying? That's going to happen at some point. It's going to happen. Mm-hmm. I don't know if it happens this time or there's a pullback to 50 and then it happens next time. And honestly, I don't really care that much because I know where this is headed. And then, my Ethereum narrative is a little bit different, right? Because Ethereum is being taken out of circulation right now, and yet you need it to run these DeFi services, NFT services, et cetera, et cetera. And so I think that with potentially 12% cash flow profits on ETH post-merge, and I think that's going to drive a short-term influx of staked and locked Ethereum, which would create a supply crunch.
All right, Bill. So much more I want to say. I have to add that you've had a funding round, a Series C funding round, and you've raised $55 million. So congratulations on that.
Thank you.
But we have to wrap. We're running out of time. So thank you, Bill, for your analysis, and appreciate you coming on the show. I was Abra CEO Bill Barhydt. All right, that's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again at 3 o'clock tomorrow in New York. Also, join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.